Okay, good afternoon, everybody. This is Dennis Wilborn, founder of Active Trend Trading. I want to welcome everybody to today's session of how to make money trading stocks and options. I have basically pulled on and said, hey, we're going to talk about trading options too. We're not going to get into really deep aspects of technical analysis other than just give some really good general technical analysis aspects. And hopefully you'll be able to take that. If you want to get deeper, of course, you can come in and become an active trend trader. We offer several services, and I would be remiss if I didn't mention the specials that we're having for Cyber Week are going to be spelled out in the description in the YouTube channel. So if you want more information, you can go there. I'm glad everybody made it today. So let's jump into today's session and see what's cooking in the markets. Pull this up. Okay, as we about 9 o'clock this morning, took the measurement on the markets. We're up about 61% for the year. You know, and the thing that's really funny is what I really love is we're doing really quite well. But I try to basically measure and put the active trend trading system into place for people who are still working for a living. I have members that are reporting back to me and saying, you know what, Dennis, you know, I'm glad you're doing that well, but I'm doing better. And I love it when people come back and say, I'm doing better than you are, because basically it's telling me that, hey, you know, I'm teaching good stuff. And so I'm really pleased with that. So we're up 61. Comparison to the S&P, we're up 46% over the S&P. Let's jump in and get into, still looking for my son to jump on board. He's not here yet. Anyway, and if he's trying to text me, my phone's on mute. So let's get and start looking at the markets. Okay, the S&P. There's one thing you should see on this market that you should be going, whoa, this is pretty impressive. And what is that? It's that basically we're getting a really nice breakout. We are getting a very nice breakout, as you see over here, right there. Now, what does that mean for us as we go forward into the rest of the year? Again, we basically think, you know, we are in a, you know, is this the Santa Claus rally, the end of year rally? It has been a little bit flaky, simply because, you know, there's still big questions about who is going to be the president again after, you know, January 20th. I mean, we all have our thoughts and our, you know, thinking on that, but we've never been down this, at least in my lifetime, we've never been down this road before. So what's going to be taking place? Well, what's going to be taking place if you're trading stocks and also rolling in on options? You trade the charts that's in front of you. So if I'm looking at the S&P, what am I looking at? We're getting a nice breakout above this zone. How far has it run? You know, and where can we expect it to maybe slow down? This is where your Fibonacci's come into play all the time. And the Fibonacci's basically is we just grab right there, pull down to here. Now this is just one of the measurements on but give us some idea where might this market run out of gas. And as you can see, the market may run out of gas at the 1618 extension. Oftentimes they'll get up to these, like here's the 1272. It got up to the 1272, then it kind of balked. It kind of slowed down and turned around and started to, you know, posture before it dug higher. So what is that number up there? It's 373.43. So that's a potential target. Let me get rid of that, remove that. What else do we have going on? As we're pushing up to new highs, as you can see, the momentum is actually continuing to push up from, you know, above its last, you know, its last peak. That's great. I mean, that's awesome. So the way I'll be looking at playing the S&P, I'll be looking at any kind of pullback back to this level of support. Because remember, we've had basically a change in polarity. Old resistance now becomes new support. So that's a great place to jump on, to look for a trade to jump on board. What else do we have going on? The Qs, the NASDAQ. The NASDAQ is the one that is basically running away with the show so far this year. One more Q. There we go. Hey, Marty Warner, how you doing? Also good to see you on board. I really appreciate you guys, everybody who makes this, because I know each one of you, because I get to know a lot of, the members of Active Trend Trading Service. I try to make it more like a family, and I know some of you have shared, the challenges you all go through, and with respect, trying to trade, trying to take care of family members, trying to work full times. And so I really appreciate your being on today's session. I mean, that's just absolutely phenomenal. I'm so pleased with that. Anyway, the Qs. Shut up and just look at the charts, Scan. Qs we've got up to the top of this level. And we had drawn in that as our resistance area. Let's also draw in a fib. I want to take this larger fib right here. I want to take this larger fib right here from this run right here, although I could do one from a little bit higher. And where might, oh, look at that. I mean, you can't make this stuff up. So where did we run out of gas? Right at the 1272. It is basically stopping. I did not draw that in before the markets. And so I was going, whoa, that's pretty good. And so basically, as you see, we're running into a level of resistance caused by the Fibonacci's. And believe it or not, we are not the only ones that watch the Fibonacci's. So what might happen? We may get a pullback back into the 8-day or the 20-day moving average. That's what I would be looking at to be able to jump on a trade on the Qs. Am I going to trade Qs to the downside yet? The answer to that is no, I'm not. I am not going to trade it to the downside simply because it doesn't make sense. We have had no signal to say the uptrend is over, or I mean, have a signal that we've gotten a good pullback for over the, for almost the last 2 weeks. And so that's what I'm looking at going on there. Again, TSI over here on the weekly chart is starting to break out to new highs. The market forecast is momentum is heading up to new highs. Same over here. The TSI has moved up into the upper reversal zone, but has done no reversal signal. So don't get sucked into the trap of, well, I'm in the upper reversal zone, I'll go short. No, that's a good way to get your face ripped off and lose money you don't need to lose. And so we want to be about protecting and jumping in at the right place on our funds. And so what else would I want to do here? I want to do one more. Let's see where this, if I take this fib here from that high to that swing low there. Oh, look at that. Okay. Again, a 1272. It got up there, slowed down. Now, this gives me a projected up to this upper high of about 310 on the Qs. Okay, jumping on over to the next one, which is IWM. Russell was starting to catch back up and push to higher levels. And we'll see, as you can see, it is breaking out nicely. The TSI has moved up into the the upper reversal zone on the weekly chart. It is spinning back up. And again, like the other indexes, I want to be, for me personally, I want to be trading either IWM or the Qs or a derivative of those two. And what I'm looking at right now is I'm looking at this level down here where it broke out of is a level of support, reverse polarity. It was resistance, now it's support. So any pullback down towards this 8-day moving average, or maybe between the 8 and the 20, about 181 or so, would give us a potential to jump on a long trade. And a lot of times what I'll do, if in case you're wondering how I run the active trend trading system, I'll park an order there. I call it setting my trap or setting my trigger trap to jump into a trade if price action moves down there and triggers it. Because sometimes it'll get a wild swing during the day, it'll hit that trap and you'll jump on board and away you go. And so I'm sitting there going, who just jumped on board? Okay. Still looking. Okay. I'm going to give my son a hard time. He's probably going to say, Dad, I was supposed to be on the other one. So that's what we're doing with the indexes. They're looking very healthy. We just need a pullback in order to jump on a long side trade. Now, I will, of course, and this is one of the things you may want to be looking at the potential of tune in, you know, or follow me on Instagram. I'm going to be doing more of those live market updates on Instagram. I'll probably do about 3 of those per week, and they're going to be right at the beginning of the day. And when I see anything kind of setting up, I worked on that today. It is a very robust way of sharing information very quickly. So if you can, does anybody want my address on Instagram so you can basically hook up there, and it's all free and all that kind of stuff. But that's where I'll be doing these live broadcasts really quick. So just let me know if you just send me a little yes in the okay. I will do that before. Help me remember to do that, Mark. So here's I am now, IWM. Steve's not with us today. Steve basically had his recommendation, though. He was very good about giving me his recommendation. I hope Steve's doing okay. His recommendation for the week is, it's the stock he's following. It's not really a recommendation. Is VEEB, V-E-E-B. This is a great looking stock. One of the things I like about it, let's take a look at this, just dissect this, dissect this. There's a couple of different ways you can trade that. One, I would say breaking back out of these moving averages would be one potential entry that you might want to look at on VEEB. It does not have weekly options, but it has monthly options. So it has good open interest on that. The other place would be any kind of a retreat back into these levels down here. Okay, it has tested this level, this breakout area several times in the past. And so, jumping on board if it retests down in there. And this is one of those. This is a retest due to earnings, which was this week. Flash, bam, dropped real hard, puts in almost a dragonfly type doji, starts to pull back up. And so buyers supported it down in that area. So that's a good thing. And we'll look for it to do more of that. Okay, so that's the one Steve has said. I want to show you just a really quick one that I'm also continuing to watch. Let's see how we're doing here. That we are continuing to watch. And that is one that came out on our, if I can find that. There we go. It came out the week of 11/22 on the pre-flight checklist. This is the top 5 checklist that we do and send out to top 5 and premium members. And it was DAR. DAR, we suggested, this was the order I placed. Get in at 46.90. And here was our first target. Here's our second target. Now we modified the targets a little bit because of the market. But how did DAR do? And also, is it basically something I want to keep on my list for moving into an additional trade? And the answer to both those questions is yes. And so where was it? We basically, I identified DAR on the weekend of the 22nd. So let's find the weekend of the 22nd. That is right there. There's the 20th, and there's the 23rd. And so I put in an order. I wanted to buy it halfway in between at about $46.90. We triggered in at $46.91 that day right there. And so you're sitting there going, well, Dennis, that hasn't moved very much. Well, yeah. Well, it actually moved very quickly, about 4 to 5%. We took out earnings on that. We took out some profits on that. Then we held on to it. It has now jumped even higher, and it now appears like it is moving high, even up above that. One of our members wrote back to me and said, hey, I traded an option on that to the upside. He bought a 18 December 47 call an at-the-money option. He paid $2.42 for it. He jumped out a part of the position at $2.95 for a 23% gain. And then he's basically still holding, but got out of another part of that at about $3.40 for a gain of about 40%. So that's another way our members utilize the top 5 automatic pilot system, autopilot trading system, and utilize it for options. I know I've got several guys who've said, "Hey, this is the way I'm using this. Do you have any problem with that?" I'm going, "No, not as long as you're doing okay and making some bucks." So okay, that's DAR. That's one. And then I just feel extra special today. Steve's not here, so I want to make sure everybody gets their money's worth. And so the other one, and now this is a downside trade, SPLK. SPLK had earnings basically yesterday before market, I think, ripped to the downside. Now this is normally not a good sign. And as you see, that's a huge weekly candlestick down to a level of support. What I'll be looking at this is a huge gap down that we have right here, a huge gap down. So look for it to work back up towards that high, and then that may be something you want to trade to the downside by either shorting it or either shorting it or basically waiting for it to run up and doing an option trade on it. Either way. But SPLK's getting, like I said, it's getting ripped to the downside. Before, if you're interested in SPLK, and what is it? It's actually not called, hold on. Yeah, it is called SPLK. Okay. But anyway, just when something like that happens with that much, velocity and that much violence, that's a good sign telling you that, hey, people are getting out of this and they're getting out of it for a reason. So, okay, that covers, I've basically given you 1, 2, 3 stocks and all the indexes. Let's jump back over to the slides. There we go. And we'll just wrap up the rest of this. One of the things that there's where we're talking really quick about, the market. I'm looking at the market just in a wait mode. Market seems to, it seems to like a confused government. I hope that's not absolutely true, but that's what it seems like it likes. And so, again, I hope everything's going well with Steve. And here's our cyber special. It is good till Sunday. Sunday, everything is off the table, but we're having some of our largest savings on the cyber. If you want more information about it, it's at activetrendtrading.com/cyber week 20. If you're looking at on the YouTube channel, that will be down in the description, so you can link up. It might be worth, just giving it a try. See what you like about it. I know several of you are on board with that, and so won't spend much time there. I love this quote by Leonardo da Vinci: "Simplicity is the ultimate sophistication." And at Active Trend Trading, I always want to provide a clear and simple trading system that basically leans towards helping people who have to work for a living but can want to squeeze in some trading. But just that clear and simple system that anybody can follow. And I know some of the people who trade the top 5, I've been asked, well, how much time does it take? Some of the people trading the top 5, they put in about an hour a week, and that's it. And then they just let their trades go, which I'm very, I'm glad to hear that. Now, of course, I put in a little bit more time than that. But so anyway, until next time, I just want to say thank you, everybody, for basically joining us today. And remember to subscribe if you're watching us on YouTube, or if you haven't found us on YouTube, subscribe, hit the bell to get the new information, and there'll be a little video that pops up there of some of the training sessions I've done on the on YouTube.